Good morning, everyone. Glad to see you here today. Hopefully you have had a good week so far, being that it's only Tuesday, but how about a good week since we last got together? Yeah, good morning. Yes, just got back last night about 8 p.m. From Chicago. We had held a seminar back there this past weekend. A lot of good times, really good people, very interactive. So if you happen to be one, I see a couple of names here. For you folks, thank you so much for attending. Had a great time. All right. Well, I always like to kind of become reacclimated with the markets. Sometimes I'll do a little bit of trading. It's not like I was totally away from the markets, so that was a good thing. But anytime I'm away from the markets for, say, a week or so of a vacation, then I'll usually take a full day of becoming reacclimated with what's going on rather than just trying to blindly jump in. That said, like I said, really wasn't away from the markets, thinking that I was instructing a seminar. But let's take a look here today. So we're going to get started here as we always do with our risk disclaimer, and let's just talk about that for a moment because it's always very important. Of course, can lose money. You're going to lose some money when you're trading. There's just no way around it. If you're not losing money, then I was once told by a fund manager, gosh, it was probably over 20 years ago. It just had a line that always stuck with me, and that was, if you're not taking losses, then you are a loser because you're losing you're losing way more capital than you should. So always remember the fact that there's risk involved. So only trade with monies you can afford to lose. Don't trade with the rent money or food money. All right. All right, that's me. Been at this for a long time. That's about it. Live here in Southern Oregon. Let's see. Came into some really nice weather last night, and so that was very pleasant after the weird weather we had in Chicago on Saturday afternoon. But that's another story. All right, so let's look at the upcoming events today as far as news goes. So give me just a second to. Actually, you're not seeing my screen here. Let me redo this. There we go. Let's back this up. So there's the disclaimer. Let me leave that on the screen here for just a minute. And I hit the wrong button. My apologies there. So we'll leave this again, trade with risk capital, only monies you can afford to lose. All right, so that's me right there. Been at this for a long time, as I mentioned. Let's come over here to the next screen. Let's talk about some of today's news events. I have a couple of places. I've mentioned this many times in the past, but if you happen to be new here today, a couple of different websites. They're free to use their economic calendars, and they are the Forex Factory and myfxbook.com. They both have really good economic calendars. I tend to just gravitate towards the Forex Factories just because I've been using it for so long, and I just kind of like the simplicity of it. But if you like a few more bells and whistles, my FX book's probably the way to go there. But I'd encourage you to check them out. Check them both out, man. So let's do that. We're gonna check out Forex Factory. Give me just a second here. I'll flip the screen over here. And here we go. So I've mentioned this before, but what I like to do is filter down to these red folders. If you scroll down here on the left, you see the legend, and the red folders are high impact events. Generally, I don't pay much attention to these others, which are the medium and low impact. So again, I just pay attention to that. Now, how do you get to that? Well, you can come up here and click this little filter icon right there and just uncheck these other boxes right up here. They'll typically be checked, and just leave the red one checked and hit apply filter. And there you go. You see no news today. Tomorrow we have some news out of Europe. By the way, these are all East Coast times right here. So we have some big news out of Europe right around 3:15, 3:30 in the morning tomorrow. Those are some big events there. Then later in the evening out of Australia. Then Thursday, more news out of Australia. I'm sorry, out of Europe. And so the European Central Bank press conference. That's always a biggie. That'll move the markets. But you can see here. So just keep this in mind when you are contemplating making any trades. If they involve this currency, any of these currencies that are listed on here, just remember that those currencies will tend to be impacted. That's why we look at these high impact events. And then on Thursday, also in the morning, we have some news out of the US. So for instance, the Euro US dollar Forex pair will be affected by this. There'll be some others as well, but that's the first one off the top of my head. Friday morning, we have some more news out of the US as well. Again, 8:30 a.m. Eastern time. So you want to keep that in mind prior to entering any sort of position. And let's see here. Let's get back here. All right. So next here, let's take a look at some charts that might be affected by this. And specifically, I'm going to look at today at the S&P, the gold market, and also, we could look at we'll look at the Euro US dollar instead of, I was going to look at the US dollar Canadian dollar, but we're going to look at the Euro USD. So let's get rolling with that. Okay, just a quick second, we'll fire this up. Yeah, you're welcome, everybody. All right, so here we are looking at the S&P. And if you're not familiar with my type of analysis, if you haven't seen me analyze a market before, I like to use some bold colors. I like to mark off support and resistance zones you see here on these various charts. I also use multiple time frame analysis and analyze the market from the top down. So I like to start with a higher time frame. My charts are basically divisible by 3 as far as the time goes. So for instance, I'm going to start out here with a look here today at the 243-minute chart. Then we'll go down to an 81-minute chart, a 27-minute, and so forth. So you can see I have these zones marked off. These really haven't changed much over the last week or two, but we had this head and shoulder pattern, kind of a very asymmetrical head and shoulder pattern here. I have the points marked off with the blue ellipse. So just to kind of give you a really quick background of my trading style, I use chart patterns involved with support and resistance, and then I'm reading momentum and cycles, and that's what these 2 lower indicators are about. And we'll get to those a little bit more here in a moment. But you can see how price really pushed down out of this resistance zone off of this head and shoulder pattern. We could even, maybe to make this a little better for you all, we'll do it like this. There's a shoulder up here. So there, you might be able to see that head and shoulder a little clearer. All right, so there was a big decline right into this zone here. Look at that. You can see that the market really consolidated. I could have even dragged this back here this way back here, because you can see how the market tested that level multiple times in through here as well as resistance. All right, so more recently, the market came down here. This is on the 19th and sold off pretty well here that specific day. And then since then has rallied pretty steadily, currently sitting just above this support level, this red line. Let's see if I can zoom in for you a bit. So I have a couple of moving averages here. This red one is the 89 simple moving average, so 89 period simple moving average, and the yellow one's a 13 exponential moving average. The 89 is really key in my trading because I find that it is an area that will many times be tested as a support level or a resistance level. It's very interesting how that comes about. But now, just above price, we have a horizontal resistance level, and we also have, and it's very hard to see, but the 50 period simple moving average is just above that. So basically this morning, price is wedged between the 89 and the 50, 89 and the 50. All right, so coming down here, looking at my momentum indicator, there's a very clear breakout here on my momentum indicator. You see above this high right here, look at that. Prices, well, this line's a little bit on the thicker side. Let's see if I can change that for you here. Give you a little better look. See, you see, it's just starting to break out. For me, it's very clear. I probably should have said it that way. So here's the thing: when momentum breaks out above a prior high or below a prior swing low, we'll often see a test of that level. So, for instance, if you line this up right here, right? and compare with that right here. So we should see a test up here around the 1309, I'm sorry, around the 3009-ish level. And there's no guarantee though. Let me reiterate, there's no guarantee, but that's what I'm going to look for, at least at the moment, at this stage of the analysis. Okay, so let me just actually draw a box around that so we can keep that in mind as we go forward. So if you look here, there's some wicks. So I'm going to kind of draw this around the wicks and the real bodies. So there, I'm going to mark off a zone there. We'll do it like that. Does that make sense this morning? I know it's early in the week. We're just kind of getting rolling here. So we have a key resistance zone that we could anticipate that the market may move into here. And just one other thought here about momentum is look how strong it's whoops, let's get that squared away right here. Look how strong it's been off of that swing low right there. Very, very strong. So we have my cycle study that I like to use too, very showing a lot of energy here to the upside as well. So right now this chart is bullish. So of course the stock indice, this is the E-mini S&P 500, opens for the day session here in about, oh gosh, about 19 minutes or so. So we're going to move down here quickly so we can take another look here. All right, so here is an 81-minute chart, and every time frame below that I look at here, I'm just trying to get a closer look, kind of, you know, under a magnifying glass, if you will, or under a microscope. A little bit different appearance than just looking at the exterior of the car. You're looking under the hood. So here you can see we're up against that resistance level right here that I have, that line drawn. Just above that, we have that red zone, the bottom of that. And here's that box I just drew on the other time frame. So momentum, again, pretty strong here, just taking out this little swing high. That's very bullish for this at the time being. So we have some bullish momentum or bullish energy in the market. However, we're running into resistance, right? We had resistance on the prior chart of the 50-period moving average, which was really hard to see, but it was right there. We also have, of course, the resistance of these two levels. You can see them a little clearer here. But if the market gets through those because of this energy, then we can anticipate that it could move up into this region. Now, when I say that, again, I'm not guaranteeing the market's doing anything. It's just an outlook. Okay, so we have that. You can see here how the moving averages are all on this time frame are below price. So they're acting as support. Let's go down to the half-hour chart. So on Nadex, you can't use a 243-minute chart, but you can use a 4-hour chart. You can use a 1-hour chart in place of the 81-minute chart. You can use a 30-minute chart in place of the 27-minute. So if you're using their chart, the Nadex charts, then that's a good way to go. All right, so here, notice the momentum indicator. Well, it's blue. That's my blue wave. That's bullish. It's really flat here. A big difference in the angle of this compared to the prior couple of time frames that we've taken a peek at. But again, you can see how the market's testing the resistance level right here. But here are these levels, a little bit clearer here. So let me clear this off and let's look left. Something I like to teach a lot about is always look left. If you just remember the acronym ALL, A-L-L, always look left, so you can see key areas that you may miss if you don't look left, and then later wonder why the market might stall out there. So you can see there are multiple touches in through here, whether it be on the upside or to the downside of these different levels. The bottom of the red rectangle, the purple line. So that's why the market's hesitating here. All right, so also on this time frame, my cycle study here is suggesting a possible top. Now you'll notice on this indicator, it follows the rhythm of the market. See that? So here we are. Now this is also bullish up in this range because this is a bounded indicator, a ceiling of about 100, a floor of 0. So it could stay up here and chop around. So, but that's why we take a look at it though, because we could cycle back down. There's no guarantee about anything, but if the market does cycle down, where is it likely to go? Well, let's take a look here. Let's mark off some areas. I am going to grab this and all right, so I'm looking left. So I'm moving down below price and I'm looking left. So we have this. All right, so I'm just going to start back here for right now and kind of highlight this area here. So that's a little support zone right there. Actually, let's change that color. All right, so if the market does pull back to this level, you can see it's about 5 handles lower, the 2994, 2994-ish level. So we could anticipate something like that is very possible. Just in the general cycles of the market. Remember, we looked at the upper time frames and we saw where the market was had a lot of energy to the upside. Well, every time frame lower, the market will have more cycles than the higher time frame. So we could see something like this, right, which coincides with this. And then we could see that continuation push up there. See how the cycles can work? That's what I'm trying to get at here. All right, we'll come down here to the 9-minute, and you can see the momentum is actually negative here. Momentum's been making lower highs. That would be right through here. Lower high, this slightly higher high, but lower than this guy here. We have a full cycle that's been confirmed now. And on price action itself, we really kind of have a head and shoulder pattern that's trying to take shape a little bit. But that 13 EMA is supporting price. You see how that moving average is supporting price. We're at a big number here too, psychological number. All right, so let's go down one more time frame here. We'll go down to the 3-minute. So I'm just going to draw some trend lines. We'll kind of get an idea where we are here relative to these lines. And we'll drop one more on here. All right, so we'll leave that one where it is at the moment. And maybe a little cleaner look here at a possible, head and shoulder pattern that might be taking shape. Let's see here, right here, a left shoulder. Let's try that again. Possible head area and the right shoulder. We kind of have to wait on that here at the moment. I'm not going to use that high there. So we're getting a little push up here at this particular moment. You can see how momentum had flipped red. Now, one thing with this indicator is that I had it designed so that when momentum started to weaken, the color lightened up or became a little whiter. And you can see here how this darker red changed to a lighter red. So momentum had weakened right there and trying to push a little bit higher. The 13 EMA exponential moving average, 13 exponential moving average. Rather than a simple moving average, it's an exponential. It's just the difference in the way it's weighted as far as the way it's calculated. All right, so starting to get a little bit more of a push here. So remember, I was talking about the bullish momentum back here on these other time frames, but if the market gets rejected at these resistance levels, then we're going to anticipate that price can pull back a little bit, right? Maybe test this support level down here on this chart in the lower left corner. Otherwise, if the momentum continues to catch fire, we're going to see that push up into that red zone. All right, so I think we'll leave it there at the moment. So if the market pulls back, I would consider or contemplate an opportunity to get long. I'm not going to trade the breakout here or the continued push. I prefer to buy low and sell high versus buying high and selling higher. So if the market goes without me, I just missed the opportunity. I'm okay with that. All right, so we got a couple more here. Let's roll through. We're going to go to gold. We're going to go to August gold. So the August contract, I believe, will switch out to December next week, if I'm not mistaken, on Nadex. So I have a zone marked off here, and prices pulled back to it. Okay, so we broke out of this zone here. Big bullish move right here on this candle. But you see that? You can see this zone, how I just looked left, started marking off some areas here. We could probably even adjust, let's actually do that. Let's adjust this up here, this purple zone. So you see how the market's still kind of stuck in that area. This is a key resistance level right here. The market is trying to push higher. See how the indicator here, the momentum indicator went white red or light red, if you will. It's trying to push up. It's still negative or bearish, and the cycle study is pushing up as well. So there's some energy to the upside here, but through the normal shucking and jiving of the market price action, you'll see some pullbacks here. But so let's see here. So we have a lot of candles right in through here that are displaying a lot of wicks. So that was a lot of indecision right through here. So just above the current price level, that's what we have, this area right here. So I'm going to just kind of make it a light red here. So kind of a resistance level. But you see that? And then now just below the current candle, let's see if I can zoom in for you. We have price just below the 13-period exponential moving average. And then the 50 is right here, and then the 89 here. So would not be surprised to see a retest of that level, just because we're still kind of bearish here. By the way, I use these moving averages for support and resistance levels. That's the primary goal behind having them on here. It's just support and resistance levels. All right, so market came up to the top of this purple zone in my trend line that I have along here as well, and is reacting to it, which is very normal. Let's go down to the 81 minute. And you see that a little bit clearer here, but notice the difference here. We're still pretty strong as far as momentum goes. The market momentum has kicked well above the swing high over here. Price actually came right into that area. So still pretty bullish. However, bullish is one thing, but cycles are another. Look where we are right here. And we can see a cycle back down, which means price can come back down, right? And bottom out, and then maybe rally from there if it's going to rally. So that means this will more than likely swing back down as well. So see how I'm just kind of anticipating a story, letting the market kind of tell me what's happening here. I see the market got rejected here at this level. So what's the next logical thing? Well, let's see where we are in cycles and momentum. That makes sense? All right, so let's come down here to the 27 minute. Now I think you can see it even clearer here. So the cycle study kind of is rolling over. Momentum's still very strong here, but look at price action. So we had, gosh, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. Excuse me, yeah, 9 out of 10 candles higher here, it looks like, and then boom, hit that level and get rejected. So right down into support. So let's draw some more trend lines here. So that level kind of cuts across these lows and these highs and lows back here. See that when I look left, you can really see a little bit more, or quite a bit more information. So the market comes right down here on this candle and taps that level. So what's below that? Let's take a look here. We're gonna just in this view, we got to kind of come back in here. So it looks like somewhere right around there. We can also just do this. All right, so there are the next 3 levels down. So you can see that could put price right down here about 14, 19, 30, it looks like. So that would be another $4 lower if it's going to continue to pull back. But that would be the next strongest support areas inside of that big zone. All right, so again, if we look here, let's just quickly look at the momentum here. Right here, we are negative or bearish, but moving up, bullish moving up, bullish hanging, just hanging out right at the moment. If we look at the cycles, we're up in an upcycle, but there is some chance of topping here and topping a little bit here. So we have kind of a mix of that energy here at the moment. All right, so we come over here up here to the 9-minute here on gold. You can see that pullback pretty clear. So let's do this. Let's come up here and grab the Fibonacci tool. I'm going to measure from this low to this recent high. And we are going to mark off an area for the 382 to the 618 retracement zone. Little Fibonacci box. And for that, I'm just going to change color here. We'll sync it over to all the charts. And so that just gives us another idea where support levels are. And you can see the market is currently right above it. Here we have the 200 period moving average, simple moving average, and the 13 are right there, kind of holding price up. If you'd imagine your palm of your hand right there, just kind of holding price up at the moment. So we've had energy kind of flip to the downside here, kind of topped out, which is very natural in the big scheme of things when you're looking at smaller time frames. So going down here to the 9-minute, whoops, let's do this. We can bottom out right here. And price can bounce off of this area here. The biggest thing for a bullish move, a continuation bullish move on this market at the moment is this resistance level right here. That is the nearest pivot right there. And again, price rallied, pulled back, a little shy of the Fibonacci box here at the moment. But we'll see. You can see these lines that I drew. See how the market's just hanging out there, reacting to them, excuse me. So a little bearish momentum, a down cycle is intact at the moment. So price could push a bit lower here. All right, so here we are on the 3-minute chart, and you can see a little bit clearer what's happening. But so if I move back to the left here, let's do this. We kind of have this whole area. See this consolidation back here, this channel area? We can just extend that out this way, kind of project it out. So this is why my charts look like a clown's face after he's been crying. Just go in here and mash these things up. Yeah, there have been a couple of fish hooks on here, Bertrand, but I'm going to not chat about that this morning. We'll just kind of focus on support and resistance here at the moment. You see, there's a hook right here in price at the moment. All right, so just a quick recap here before we move on. Just got a couple minutes left. So price on the higher time frames was bullish. The bullish move here on the prior 4-hour candle. Momentum is bearish, but is angling up or weakening. We've run into resistance. So the market's reacting off that resistance. It's pulled back some, and in the support levels or support zones that I've highlighted via moving averages and horizontal trend lines is attempting to bounce now. You can come all the way over here to the 1-minute chart, and you'll see that a little bit clearer. This move here is about a $2 bounce here at the moment. All right, so I think you can see it's kind of a mix. You kind of got to watch this before you get a clear entry. Again, I'd much rather buy low and sell high than buy high and sell higher. So I would watch this. If you're not already on board gold for some other reason, I would look for a potential move on a pullback, perhaps down into this Fibonacci box zone, and see if you get a hook, a candlestick pattern, a hook, whatever it might be, to perhaps get on board there. All right, so lastly, let's end here with the Euro USD. And I don't have anything really marked here this morning, but there's some pretty good selling you can see here. So this is from last week. Let me just kind of update this very quickly. I'm just going to extend these support and resistance zones to the right here. And we'll move this one as well. And so this support zone looks like price just broke below it here. Yeah. So let's look left. So if we look left from current price action, you can see, well, we have some lows down in here. So I'm actually going to move this down into this area to kind of highlight that. And yeah, let's see here. So that'll be our support zone. Our resistance zone, we can actually redraw that as well. Okay, so let's take a quick look here. I'll just kind of give you kind of a heads up here on this chart via the information it's displaying right at the moment. So we have a lot of downward momentum here. Down cycle is in play. The next level that this market is looking to push to is right here, the top of this green box. Right, you saw me just mark off that support level. That's a logical level for the market to move to. However, got to always preface it or remind you that no guarantees, right? There's no guarantee in trading. So this looks to be the 1.1146 level, and the market's at the 1.1164 level. So it's roughly 18 pips we could see the market push to here to fill that in. Now, this is a 243-minute chart, so each candlestick represents that. It's essentially 4 hours. So that may take some time. But you can see the breakdown here. If we look at this move from here to here, the market consolidated, kind of a bear flag, and then pushed lower from there. So one other note we can do here, just kind of project this a bit. Yeah, so you can see if I do a little market geometry here, some of you know what that is. It kind of projects right at the top of that zone. All right, so good momentum to the downside. Let's go to the next time frame lower here, the 81-minute. And let's see if we can get that green zone on there. There we go. So you can see the clarity here that you get once you start marking these zones off. At least the clarity I get beyond the clown face. All right, so this level here, you can see where that falls in play here, how the market just took that out. That was an important level. It consolidated there for a couple, 3 candles before breaking through and closing down there. Again, bearish cycle and bearish momentum, and this is an impacted indicator at this point down at these low levels. That shows a strongly bearish trend at the moment. You can see this area right here. In fact, let me take these. I'm going to drop this right here. Get rid of this one. And I would anticipate that this is going to be filled in, this little cloud area here. There we go, a little cloud that can be filled in. So I don't want to, again, I just as I don't like buying high and selling higher, I want to, in this case, right, sell high to buy back lower. So I want to sell, so I want to see the market bounce is what I'm getting to. I'll spit it out. It's been a long week. Lots of travel, Good times though. And again, for some of the USC that have come in a little bit later, thanks again for your participation this past weekend. We had a great time. All right, so I'm going to measure from this high right here down to this current low, right at the top of that ellipse. There are a couple other measurements we could do, but this is pretty rough. But we will just do it like that. Look for the market to maybe come up into that range. That would be ideal for a potential shorting opportunity. See if we can find some better ones here as well. We can come all the way back here. So what I'm going to do is I'm going to draw about 3 of these, and they'll overlap. You'll see here. Maybe they won't overlap. So we have that one. And then lastly, we'll move this all the way to the top here. And we'll draw one more here. There we go. There's the overlap right there. All right, so the large fib levels here, basically from the bottom here to the top up here, covers that. And now myself, what I would, because we actually have one down below, we have one kind of in the middle, and then one up here. So I would look generally right around this level here, which happens to coincide, right in here. See that? Support level, old support level, now resistance. We could even shore it up a bit. So basically that 382 level right there. So ideally, I'd look for the market to move back up here over the course of the next, I don't know, it may take a day or so to do that, and then look to get short. However, remember, if you were here at the outset, we have news coming out, right, out of Europe tomorrow and Thursday. So be aware of that if you're looking for a longer term type of trade. All right, so the market's starting to stick its nose in right here at this level. So I'm going to wrap this up here this morning. We'll stop right here on this chart, but let's do this. All right, so on the 9-minute, there's really nothing in this ballpark here as far as price levels go. Let's do one more thing. We'll bypass this 9-minute chart. I want to come up here to the daily. Yeah, so you can see the daily's heading right to that green zone that you saw in the smaller time frames. That's drawn off these wicks here on the daily chart. Wicks will be hunted like magnets. The market tends to move and fill those in. If you ever heard if you're a futures trader and you've heard, gaps get filled, these, I think this is much higher probability than gaps getting filled, because futures contracts expire so that the gaps don't always get filled. But it's something to keep an eye on here, right down into here. All right, so again, I'm just looking for some sort of retrace here for a possible shorting opportunity, but keeping in mind, see the market now just dropped even lower into that. Let me change the color of that. It's hard to see. Let's just go back to, there you go. See how it's moved into it. And it may just continue to push here because there is, again, a lot of energy here to the downside. You look here, 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 here. See this? These are the markets you want to try to catch these more at a higher price level, right, before they're already pushing lower. I don't want to sell here because guess what happens when you do that? That's where you get left holding the bag, and then the market bounces. So that's not my game. I want a retrace or I'll miss it. There you go, everyone. That'll do it for today. So you got a couple of different things. Again, we looked at the S&P, we looked at gold, and of course we wrapped it up here with the Euro USD. Hopefully just you pick up a nugget or two. I think really we spend 30, 40 minutes together. If you can just garner one nugget that helps you out, that kind of resonates with you or gives you an aha moment, it's well worth your time to come in here and look at my clown charts. All right, everybody. We will look to do this again. I believe next week we are on track for that as well. So we'll just keep plugging forward. Remember, around holidays, as we get closer to Labor Day weekend here in the States, that the markets will really tend to thin out as far as participants, because money leaves the market for that's a big holiday, big market holiday. And just be aware of that. And then you tend to just have some wacky moves around those big holidays. All right. All right. So we are, of course, still in July here, so that's a ways off, but just kind of maybe consider marking it on your calendar to remind yourself. All right, everybody, that's going to do it for this time around. We will see you next time. Again, thanks for joining me here today. I'm Jim Prince. God bless. We'll see you all again next time. Take care, everyone.